Mute. Good afternoon, everybody, and welcome to today's edition of Live Market Analysis ASX. My name is Carl Capolingua. I'm the market analyst over here at Think Markets Australia, and it's a pleasure to be with you as we delve into your portfolios, try and keep the winners, kick out the losers, and find some new ones to add. The housekeeping item here is very simple. Over to you, Q&A window somewhere on your Zoom platform. If you're watching me on Zoom, or definitely there's a chat window there. On your YouTube, Twitter, just tweet back at me. Your Facebook there, send me a message. And LinkedIn, also happy to take your requests, and I'll give you my best technical and fundamental analysis reader. I do have some requests already coming through here from Doug. First in, MGH. Let's do that one. And I'm going to head over here to the charting package. And you should know that on my screen here, I do trend analysis and trend following primarily. If you're looking for any other styles, you might be a bit disappointed. But basically, I'm trying to find stocks that are exhibiting signs of excess demand and looking to buy those, or stocks looking who are exhibiting signs of excess supply and looking to sell those. Why would a stock have excess demand? Well, think about what excess demand is. It's demand in excess of supply, isn't it? So demand is cash coming into the market, looking to find an attractive reward to risk. Okay, now there's two aspects there, reward versus risk. Okay, and we're only going to buy a stock if we think it meets our minimum criteria for that. Supply is people who own shares, and they will try and obtain cash if they see better reward to risk elsewhere. So if a stock is showing a strong trend, price action candles, it's telling us that the people with cash feel that there is good reward to risk, and the people who own shares are withholding the supply, and they are doing so because there's good reward to risk. So let's just use that as a preface for what we're going to discuss today. Now, how do I identify the trend? Well, I start big picture with my trend ribbons. You can see here they are coloured in a traffic light system so that when the stock is going up, we don't have a lot of data here for this one. Green is essentially happy to be looking for longs, not necessarily going to take longs, but looking for longs based upon some other aspects I'll show you. Amber is that the trend is potentially changing, so just be a little bit careful about continuing to look for longs. And when we get significant compression through here, the price breaks below my trend zone and confirms beneath it, probably around here is the best way to put it. And then it will eventually go red or pink. That is no longer looking for longs. In fact, we're looking for potential shorts. The short-term trend works in the same way, oscillating between light pink and light green. So what we have here is an indeterminate long-term trend. If you're not sure what the parameters for the long-term trend ribbon are, they are 144 and 233 EMAs. You can get that over here. And my short-term trends are 21 and 34 EMAs. Why those EMAs? Because they work the best, I can assure you. And you can go, put them on your charting package. Nothing stopping you from doing that after this. And going back and checking and making sure in your mind that they work and that you have therefore the confidence to use them to identify your trends very quickly. And it's a very quick visual assertion here of what that trend is. So I can very quickly say that the long-term trend, we're not that sure, but it appears to be changing from down to up. The short-term trend, we're very sure. It's very clearly light green, and even better than that, the ribbon is getting wider. And that tells me, well, I've got an acceleration in that short-term trend. So there's our nice short-term uptrend. The next place I go, so I know it's something I could be interested in buying straight up. Okay, the long-term trend is trying to change back to up, and the short-term trend is up. Great. Next place I go is to my price action, and here I'm drawing in my peaks and troughs. And we're looking for the highest points between short-term uptrends and short-term downtrends. I've shown you how to measure those in the past. But it should be pretty clear where they are on this chart. And what we want to see in the price action is, I guess, we're drilling down now within those trends to determine that we do have building demand in the system, because each one of those troughs is effectively a point of demand. If you're not sure why they're a point of demand, well, the price went up from there. And the only way really price can go up is if you've got an excess of demand. So they're points of excess demand really is probably even a more accurate way of describing them. And we can see that the points of demand are rising. Each time we pull back from a point of supply, we don't go down as much in price as we did the previous time. Also, those points of supply are rising, so that we are seeing supply backing away and backing away. Now, ordinarily, this would be counterintuitive. Ordinarily, if you went to the economics textbooks, they would tell you that this doesn't make any sense at all, that price is going up and yet there is less supply in the market. Just think about, repeat that sentence back into your mind. Price is going up. I can see clearly price is going up, but there is less supply in the market. Okay. Normally we think when the price of something goes up, people are going to supply more. It is a little bit counterintuitive, but you have to think a little bit counterintuitively to be successful in the markets. Okay. The other thing is people are supposed to demand less when price is going up, not demand more, but clearly they are demanding more and they are supplying it less, even though price is going up. So something good is going on here. And this is because the way the stock market works is that prices aren't going up for no reason at all. I mean, if I go to the supermarket and a can of baked beans all of a sudden went from 99 cents to $9.99, of course I'm going to demand less baked beans, okay? If I had baked beans in the pantry, I'd probably walk down to the supermarket and sell them out the front for $4.99. Okay, but stocks aren't baked beans, ladies and gentlemen. Stocks are a reflection of the underlying earnings capacity and the future returns. And what we can see here is because the expectations for those future earnings are getting better and better. In fact, as the price is going up, the earnings are getting so much better that demand is actually increasing and price and supply is decreasing. Hopefully that just set off a little light bulb in your head as to how to really look at stocks. So the price action is good. I've talked about what good price action is. We want to see rising peaks and troughs, but not just rising peaks and troughs, because for me, that's excellent price action. That's scenario one. This is scenario two, and it also is rising peaks and troughs. But you can see that whilst we get from the start, from the bottom to the top in the same we get from the bottom to the top, we do it in a very different fashion. For me, this is a market which is very clear about what they think about the stock. And this is a market that is a little bit unsure as to what they think about the stock. Now, if you're owning a stock, do you want the market to be very clear that it is an amazing company, or do you want the market to be a bit unsure? I think we want clear. And the way we measure that is we say that the last point of demand really should be trading at or above the second from last point of supply. Because when you think about it, that's your last point of demand, that's your second last point of demand. This is your last point of supply here, and this is your second last point of supply. That should not be a 3, that should be a 2. So this looks very good. And then the final flourish is the candlestick. So we're looking for, I guess we should be also looking for support and resistance zones as well. We'll get to that in a sec. But looking for long lower shadows and white bodies, and we've got that here. So this is really checking out very nicely for me. And I guess that's a nice little segue into, well, let's look at where the points of demand and supply are, the major points of demand and supply from the past, because we may well get demand and supply there again in the future. So if we look at that was an area of potential demand, let me undo that, I'm going to change the color. So we say this was an area of demand in the past. How do you know it was an area of demand from the past? In fact, I'd go so far as to say it was a major point of demand, wasn't it? Because the price continued to rise from there for a good 2.5 months. Okay, let's just change the color on that one so we can see it better. You can see through here, price went up for quite a while. Okay, that point of demand, once we break through it, we expect it to act as a future point of supply. So really, once we get through it from here, we're expecting supply in and around that zone. So we're actually not that far away from it. So I can say that everything checks out on the trends, the price action and the candles, but where this might fall down, and just a little bit, is that if we were to buy it here, we may not have a huge amount of upside until we start to hit some supply from that past demand zone. And the reason why we expect that to be the case is that people who got in around this area, did they get in and around this area? Of course they did. Look, at 3, 4, 5 months, that was considered to be cheap by the market. Okay, the stock was $6. It's down to 360. Market's cheap. Value investors tell you it's cheap. Not Carl. Carl will tell you it's a sell, but they buy it. And then when it breaks down to 240 and they slap themselves on the forehead and they say, well, really, that wasn't a good thing to do. That's their entry price. That's their break-even zone. So you've got a lot of investors up here viewing 360 to 4 as a place where they can undo their mistake finally. and it will create what we call latent supply in the market. So latent, not latent, as in, come on, supply in the market. So I can long story short this one. Now, I'll give you a long story. Here's a short part. I think it looks very, very good. I'm a happy holder, okay? And that's where we're going with this. Hold is 100% hold. Buy, sell is 0%. There's no, I can't see any reason to sell this. There's nothing in the market to tell me that people are so concerned about that supply zone that you should be getting out right now. The candles aren't telling me that. As for buy, well, I've got 100% for hold. Look, I'm probably being a bit of a wowzer there. So let's go 10%, 15%, 20%. Look, I don't mind it. I'm probably even going to do that. And I'm going to say then that it wouldn't let me delete there. So anyway, let me try that again. Let's go buy 20%. Let's go hold 80%. I can do it now. And let's go sell at 0%. And I think if you can start to think about every stock you look at in terms of these types of percentages, I think you'll do much, much better. I think if you objectively look at the technicals and then say, well, okay, now that I've considered everything, how do I feel? How do I feel about this one? And if you can get your buy into, at least 50%, then I don't mind adding a little bit of risk, dipping a little toe in the water. And I had a couple of toes chopped off this week. PointsBet was one of them. And it's always frustrating and annoying, but I do know that, by just having this model where we're just adding a little bit of risk, when we're uncertain on some of these turnaround plays, which is what we're looking at now, the worst case scenario is you lose a little bit of the fin there, doesn't she? She might have to, just reconstitute that fin a little bit, but otherwise unscathed. So that is, I guess, the way we're going to think about adding risk. I'm not going to write the what plus 1/3 on this one because I don't think we're there yet. Okay, but it just, I know I spend a little bit more time on the first one each day, but hopefully it just gives us a bit of context on how to answer all the rest of them, and then I don't have to spend as long. And the next one we're going to look at is James Hardie, which is one you can see in the past that we were a plus 1/3 on. And I tell you what, this is a stock which, certainly, well, before then, but probably from around here, go check my tweets, I was saying short sell, short sell, short sell, short sell, short sell. And it eventually got to the point where, that was the wrong thesis. Why? Because the short-term trend changed, the long-term trend started to change. And I haven't been calling a short on this for quite a while. In fact, if you check my tweets and check my charts, I've started to call it a buy. And it just goes to show that you have to be flexible. You can't always marry yourself to one view of a company because the market will change its view, and therefore you need to change its view. And this is one that obviously we've been looking to get back into. Why? Because it's, I think, even more advanced than the last one in terms of changing that long-term trend. You can see we've got more orange. We've got more tests of that orange zone. And we're, in fact, going from a sort of a market mentality where the orange zone is resistance and pushing price down, right, to a zone where, or a market mentality where the zone is actually supporting price. And that's really important. And that was one of the key reasons why I was happy to add some risk. And again, just adding 1/3 because it's very much one of those more risky turnaround plays. How is that going for you? Probably pretty good if you followed, that suggestion. I think you're making a little bit of money here. Should you be getting out and taking profits? Not based upon that candle, but don't forget, I'm just looking at the time here. It's 11:13 a.m. over here in the West, and add a couple of hours, or maybe a bit less, depending on whether you're in Adelaide or on the East Coast. So it's not 4 o'clock Sydney time. We haven't got the market closed, and we haven't had the definitive yay or nay from the market. All the people looking at the report that's come out today, obviously, and saying, look, this is something I want to continue to own, and therefore we're seeing that white candle closing towards its highs. If this candle closes towards the highs, again, reflect back on what I said about prices going up, and yet if it's closing on its highs, that means very little net supply by the end of the day and all demand. People still love the stock, and therefore I feel you should continue to love the stock. If, however, we see supply come in, we can see already the early signs, and it's only just early signs now of supply coming in with that upper shadow. The only way you can get that shadow is if there's an excess of supply within today's trading session, okay? at the moment, demand is still very much in control. But if we see that shadow build, that line part build, and the body or the box part gets smaller and smaller, potentially even to the point where it's no longer white, but it starts to trade beneath its opening price of the day and therefore become black. So what would that look like? I have to draw this candle at some stage today, don't I, ladies and gentlemen? So I might as well draw it now. Is this one here. And if it starts to look like this by the end of the day, then we're not in such great shape, are we? We would have to concede that the market is looking at current prices as an opportunity to take profit, not and that they're not justified, or that the announcement today isn't justifying the sustaining of those higher prices. So let's call that candle 1, because we're no guarantee that the current candle will end up being candle 1. In fact, there is every chance that the current candle turns out to look more like this one here, which, give me 1 second and it will change color, and it will grow a little shadow down the bottom looking like that. And if the current candle turns out to be more like candle 2, okay, then everything is hunky-dory and we would continue to hold. In fact, I would view, if we closed with a candle 2, I don't mind adding another 1/3 to this. So let's just say if we get candle 2, right, for me, that's another third, adding risk, even though it's popped up. I know it's a little bit of a ways away from that light green zone, but I think if we can close on the highs today, I like to buy big white candles after news announcements. Okay, so I would happily go 1/3. I know it's going to blow a few people's minds, say, I can't buy that now, it's gone up too much. What? It's gone up too much? Has it? Maybe, I don't know. It could go up a lot more. Maybe, I don't know. But I'm not going to be so small-minded as to say, well, and put my opinion on the market. Who am I to say whether it's gone up too much? Please don't do that. If we get candle 1, and this is a little bit how fickle demand and supply is, and you tell me the market isn't fickle, would I sell? If we got candle 1, would I minus the third that I bought a week ago, or whatever it is? I think I would. I think I would, based upon that candle. If it was to close on the low, we know we can just easily see what that low is. Let me just type that in so I can finish the note there. And we'll say that the low is, say, 35.81. The open is 36. So if we're closing sort of less than 36, then I'm starting to get a bit concerned. Until then, I'm a hold. And sort of just to finish, well, we can't look, because the last candle is so important. I was going to do the buy, hold, sell percentages, but because the last candle is so important, I think let's just see where that one lands. Okay. Let's go to King. King's got NXD, which has got a couple of problems here, King. And again, that last candle is live. It's been a great trend up to this point. Hopefully already you can see, based upon the stuff I've taught you in the 10 minutes we've been talking, that there's plenty of places to buy this and plenty of reasons to buy this in the past. Okay. The most magic one, I feel, is here. Look at that candle. That is just the most magic setup. So basically, ladies and gentlemen, you want to take that setup there and snapshot it and stick it up on your wall. Okay, that's the one you want to be looking to buy based upon my methodology. In fact, there's another one that looks pretty good there, isn't it? So pulling back to the light green zone with wonderful candles and price action, all the other stuff we've talked about, and then throwing in that nice big white candle. We've got the opposite of that right now, don't we? Okay, we don't have that overwhelming vote of confidence. In fact, it's going the other way. And we've got a few problems here. And I know King knows this, okay? But King just I think King just wants to hear it from me. Correct me if I'm wrong, King. King just wants to hear it from me, but I know King knows this already. Let me get the right color. Okay, so let's go here. Oh, wow, maybe we did, maybe we didn't. I'm just going to go there. It's the end bit that's the most important there, and we're heading down here. And we don't know where that next candle, we don't know when the next short-term downtrend, which is this bit over here, short-term downtrend, So lower highs, lower lows creates a short-term downtrend. Prior to that, we had a short-term uptrend, which is higher highs and higher lows. And the highest point, ladies and gentlemen, between the short-term uptrend and the short-term downtrend must be our point of supply, okay? In here, we've got a short-term downtrend, all right? Lower highs and lower lows in the candles, and the lowest point between a short-term downtrend on the left and a short-term uptrend on the right must be our point of demand, and that we then just label that as a point of supply. And what I was inferring to before was that King knows exactly what the deal is. With the building supply in the market, with the nastiness of this candle here, and really, I think King blending these two candles together, because this, I think, here is an important, these two candles blended. Let me do that one. Let me do that one and copy and paste that, and then do that one. So I think blend these two candles, so blended, I think equals a major supply side event, okay? And they're the ones that really catch our attention. And together, I think, when I say major supply side event, I think together, those two candles are enough. And especially if we get big volume on those, and we've certainly got big volatility, you can see down here in the ATR, and we definitely got big volume here. Well, that's okay. Don't mind volume on that one. No, well, I wouldn't say we got extraordinarily awful volume on those. Okay, so, but if you do get big volume on those, they're even more indicative of supply. I shouldn't say predictive. I don't like to predict. They're indicatives of supply. If I say predictive, it'd be at odds with that 6-tweet thread that I put out today. So they're more indicative of supply or excess supply in the market. So I would say if you see those, just next time, King, I know you can't do anything about it now, we can't go in the time machine. I think they're a third. And then I think you're going, if this candle ends up being as black as it is, again, we're looking for, this puts us on alert, right? Up to this point, up to that point, I mean, these were not great, but I think they were pretty small within the context of the trend. But even then, if you were jittery and you wanted to blend all these candles together, you went minus 1/3, no problems, because you're a major 1 plus 1/3 here, right? It's like your worst case scenario is just to get out some. Like we've got to let go of this. Oh, I don't know what to do. Oh, what if I do this and it's wrong? You have to let go of it, ladies and gentlemen. If it's wrong, it's wrong. You live to do the analysis on another day. I was going to say live to fight another day. We shouldn't be fighting. We're just doing analysis and making calls based on that analysis. Hey, nothing we do here is going to solve or make worse any of the world's problems. Okay, I can assure you of that. Nobody cares what you do, and you should be the person who cares the least. Okay, just make good decisions based upon the analysis, and the rest will take care of itself. So my point is that if this candle ends up being as bad as it's looking today, King, and it's closing currently about 161.5, I'm going to say if it closes really here or lower, then I would say I'm going to go minus 1/3. And we know that when we get beneath this level here, that's where we go minus 1/3 again. Okay, and what I'm trying to help you to do, King, is to give you a roadmap of how to completely exit this trade. Okay, if that's you. So we've now I can do this because I don't think the last candle matters so much within the context of beneath that point of demand. We know what we're doing. Okay, so let us here now do the buy, and I think buys at 0%, King. What do you reckon? I mean, we can't buy that, obviously. Hold, I think we're sort of a 50% on a hold, aren't we? I mean, we're just trying to figure out, because this candle might end up being, I'll show you in a second. I lost my caps lock. I think that's kind of where we are on this one. And the good news is buys off the table. So isn't that great to know, well, I'm not buying this. At least you know what to do. Okay, it might not be right, might be wrong, but at least you know what to do. Knowing what to do is half the battle. Okay, so let me just draw that because that candle might end up being this one here. Okay, so let us say or assume that because the candle is open, anything can still happen. I think that's a sensible assumption, but it might end up being this one here. So if we can find some demand in the system from the current lows, and therefore the current closing price pushes up and up and up and up and creates the lower shadow, and then eventually even potentially pushes it above the open to create this white candle. Okay, we're talking about this candle transforming itself by the end of the day into that. Then this all changes around, doesn't it? I don't think we're going to get to a buy, but the hold will go significantly higher, and the sell would largely come off the table. It would be great because we know then we've probably got a full stop, a full sell beneath that point of demand. Okay, but we're talking hypotheticals here, so let us keep moving. When we, probably could have looked at James Hardie on the fundamentals, but I'm assuming we've done that before. And because the announcements come out today, I reckon all those broker numbers are going to change. There's no point looking at old data on James Hardie. We're going to get all their consensus numbers based upon yesterday. And they're all going to get changed on today's announcement. So let's look at James Hardie in a couple of weeks. I won't look at the fundamentals for this one because it's not like we're about to rush out and buy it. Okay, this one's from Anonymous. Let's do TSO. Tesoro Gold, not one I'm familiar with. Maybe it rings a bell from my distant past. Through here, I reckon I was tweeting about it because it was going up. Okay, and then I stopped tweeting about it. And you have to kind of put the dots together and say, well, I can't stop tweeting about it. I better do some analysis and work out where my species-ending supply events are coming in, where we're making lower points of demand, and where we are cracking beneath the point of demand that lives between those two. And I'm going to miss these out deliberately, but just draw in these ones here, okay? And we know that when we get beneath this area here, it's generally not a good sign. And note that the point of demand here ended up being a pretty clear-cut point of supply. And really, once we cracked, there was nothing left in it from there. But that is the past. Let's go to the current. I don't have to spend a lot of time on this white. Look at the long-term trend. It's not going to pass my filter there. It's got a bit of work to do to make that long-term trend go from obvious, clear, outright supply, okay, to maybe finally starting to act as demand. But we're not there yet. We would need to see some price action that does this sort of stuff first, and then I could become interested in this. Plus, we would need to see some white candles. But it's really, I think there is some concerted profit taking in here from that last. It'll move up from oblivion, let's face it. It's oblivion. It wasn't oblivion. It's now a little bit less than oblivion, okay? Buy, hold, or sell on this. Look, I could probably squeak to a hold, but even then, there's got to be better stuff, better opportunities, better charts, more interest out there in the market than Tesoro Gold. So apologies, Anonymous, if you got it, and that was the one that you were hoping was going to be the big winner today. And it may well be, but based upon the evidence I can see, it's not something that I would want to buy. LRS, maybe we'll have better luck here on Latin Resources. This one is for Peter, and this is obviously a hashtag lithium stock. And we might very quickly do a bit of a lithium review at this point. But I think this is one of the better looking small cap lithium companies out there. I do like the trends, and straight away comparing, say, Tesoro to this one, we can see the long-term uptrend in place. We can see the short-term uptrend is very well established. Price action looks pretty good. I'm seeing higher peaks and higher troughs through here. I won't draw them in. And the candles, I would suggest, are exemplary. There's a little bit of supply today, but I don't think it's anything to be too worried about. I'm impressed by the fact that we have cleared this point of supply, and in fact, we cleared it emphatically. And what I would expect is if we were to maybe just pull back a little bit, I think this area is going to start to behave as a point of demand going forward, because I think that's where that short-term trend zone will catch up and this will start to progress. So certainly a hold at this stage. I don't think I'm buying it based upon that candle and its distance from the light green zone. I want to see it come back a little bit closer. In fact, you sort of look at this candle here. I think that was very good. We are obviously going to see a great deal, an immense amount of supply up here. I mean, this is going to be a major point of supply up here, because you have so many chat room hopefuls, and hopefully the person who's hopefuls, two L's, hopefuls. I don't even know. Correct me if I'm wrong. Doesn't look right, does it? Hopefuls. Hopefuls. It's not letting me delete for some reason. There we go, hopefuls. It still doesn't look right. Hopeful. We're full of hope. I'm not going to dwell on this. Hopefuls. praying gets back up to here. Back up to, when you type something out, especially in caps, and it just doesn't look right in your brain to sell finally. All right, so we're going to have supply up there. Happy holder. I've told you what I need to see to buy it. I'd like to see, the demand side candles in there. And if I saw those, then I could happily add some risk to this one. And you know what they look like. They look like that one there, or its best buddy, which will appear on the screen in just a second. And just for future reference in today's presentation, everyone, these are the demand side candles, or the demand side buddies that we want to see on those pullbacks to that light green zone. Okay. Now I will, just for completeness and to prove to you that I'm not averse to doing it, but head over here. And I know we're not going to get anything on LRS, but funnier things have happened in the world. Oh, we do. Well, there we go. Stand corrected, maybe. It's trying to catch up. Now, I don't know, it says 4 estimates. It doesn't look very reliable, though, does it? There's no historical data on this one. And you notice I've done an upgrade, ladies and gentlemen. Look at this. So this will shout out to me every time I haven't made this sell the same as that sell. It will tell me. Okay, I still can't get a growth rate because there's no earnings. Okay, well, it seems we have 4 brokers. They've got an average price target of 26 cents, which allows 48% upside from current price. Very impressive. We're not going to have any earnings potentially until FY26. When we do, we'll have a PE of about 3.25. I can't give you a valuation on this because I need earnings prior to that. But for what it's worth, for you, Peter, I'm sure you are fascinated to see that there is broker coverage, 1 strong buy, 2 buys, and a price target of 26. I didn't know that, and I wasn't expecting to see it. But there you go. So that is the scope of the work we can do in these sessions today. Now, I better get over to the streamers because they're probably getting a bit tetchy and feeling a bit neglected. But Boom and Squeak is asking for PME, which is Pro Medicus, one that I've been very positive to in the past. I think we're okay, because we're holding that long-term trend zone, but I'm starting to get a bit worried about it. And the reason for that is you can see these consistent black candles through here. It's fallen into underperformance of the index, right? So you can see down here that we are now underperforming the index on a relative strength comparative basis. Okay, so you could be going down, but beating the index, right? So the index is going down faster and you're not getting sold off as much. And that would actually go green when you think about it. But here we are going down, and we're going down faster than what the index is doing, because the index hasn't been that crash hot anyway, right? So that's not a good sign. We obviously have lower points of supply, and I'm going to go, MPOS here, I think, and I reckon MPOS here, and we've got some problems, and we're beneath this pod here, and we're not exactly, rampaging back up off this long-term trend zone. So I'm a bit concerned. What would you do? Look, if you've held it forever and you're making good money, I think based upon everything we've seen, even though today's candle's not awful or anything, I think you start to lighten the load just as a precautionary measure, or if you're a bit more conservative, you want to give it a bit more time, I'd be watching for a close beneath that area there, right? So that low there is, and having a look up here, 59, and then we scroll over here, we get 59.27, then 59.38, and you can see where I'm kind of going with this, 59.29. Look, I don't think I know what I would do, so I'm going to go close less than $59 equals minus 1/3 for me. Okay, that's where you kind of really can't leave it any longer. Okay, but I think there were opportunities prior to this, based upon everything I've taught you, to be exiting minus 1/3 prior to that. Okay, I'll just take that off because I don't want to confuse myself later and say that I told you to do it back then. I didn't. So we just hadn't looked at it, that's all. But that's the way I'm looking at that. So if I had to go buy on this one, 0%. And some people say Pro Medicus is the greatest medical company in the history of mankind. It's got great growth and all that sort of stuff. I can see, look, we're probably 50% here, and then we're probably 50% here, aren't we, right now? That's our thinking on this one. Okay. Now, I hope beyond all hope that does good stuff. Okay. This is what we see. That long-term trend zone holds. We start to see price action. get back to high peaks and high troughs, showing us that the pesky supply that's been sitting on this one has been absorbed by the cash in the market, still looking to buy this in the long term, and that's what that long-term trend represents. And this is why, we don't jump at shadows. We say, well, let's give that long-term trend a chance, okay? Because through here, it has been very, very reliable for us in the past. Short-term trend turns back up like green, that'd be nice. White candles, demand side buddies, all that sort of stuff, okay? I won't look at the fundamentals for that because we're not necessarily looking to buy it right now. That one was for boom and squeak. Hopefully that answers your question. And Rushang wants XRO, which I still think looks fine. I know it's one we've been positive on in the past. We've been adding risk. It's very much the turnaround play. And I will play this now because my turnaround plays where we are, not sure why that's gone all blank. It was working before. There it is. My turnaround plays where we're looking to get into something as it's turning its long-term trend from down to up. I do very much feel that they are higher risk, and therefore we are just dipping the toe in the water on those, okay? So we've been plus 1/3 on Xero in the past. I think you can hang on to that. I'm not sure what I was saying through there, talking to you about price action and demand side buddies, I guess. But nothing, I don't think anything needs to change here. Short-term trend is still up. Long-term trend we know is trying to transition and change. The candles and the price action aren't ideal. So if we look at, we've got lots of compression through here instead of those nice clean peaks and troughs, this magic price action. We're not seeing it. There's too many black candles for my liking. This white candle is important. And in fact, I think it's so important that if we close beneath that white candle, I think we take our medicine on this. Not to say that you're probably losing money. If anything, you're probably okay from wherever. I can't remember where we said plus 1/3 on this. I suspect somewhere around here. But let's say close beneath here. Close less than, I'll give you a number in a second. That low there is 89.60. So let's go 89.50, just give it a little bit of leeway because points of demand aren't perfectly rigid, right? They're sometimes a little bit spongy. So 89.50, I forgot already. We're going to go minus 1/3 on that one. It's up here, 89.50. Yep. I wanted to zoom out a little bit because I wanted to see all this compression. And this is why really when we do look at a new stock, I do need to remember to zoom out because I saw that compression. I thought, okay, that compression is not a coincidence. So I'm talking about this here. Okay, that's not normal price action. And I felt looking at that, it's not a coincidence. And I sort of felt that there was probably a big point of supply from the past just impeding that price action. And it does look like we're not far away from $100 might be the issue. Look, happy holder at this stage. There's nothing so sinister in the current candles to tell you to get out, but there's some reasons why we're not going to be, really excited about this one and buying it hands down right now. Also from Rushang, let's go to LLL, which is Leo Lithium, and will pop up on your screen in a second because just the way Amy Broker organizes its lists, I can never find the darn thing. There it is there. Now, look at this. I'm pretty sure we covered it last week and we said, look, hold on until you see the supply side buddies now. And this is great because I won't need to draw them again. But much like we had our demand side buddies, these are our supply side buddies. And I forgot to do the lithium review, so let's do it now. There are supply side buddies. And we haven't seen them. I know this one is not ideal, okay, but I don't think the upper shadow was so terrible that you would have to panic. And the reason why we were concerned was that we're at the major point of supply. In fact, I think we've dealt with this point of supply really well. Okay, so let me just move this out of the way and make sure I'm not missing any candle underneath it. So just move these guys to the side there, and maybe that one there, and maybe that one there, and move that over there and say, I think we're dealing with that supply zone extremely well, extremely well. It doesn't look like the market's really that concerned about it. This huge white candle, these lower shadows, I think this is setting up for another run. Do I think you can anticipate it and just go plus 1/3 right now? I don't mind it. We're just dipping the toe in the water, and that's why I'm not putting everything on the trade at this point in time. But I think plus 1/3, I think you can be in the market on this one. As I've said in the past, a happy holder. And if you're not, I think you can add some risk to this. And then if it starts to close above this level, then you can add another third on that one. But just be careful, because you're going to see, I won't type it in, the almighty point of supply up there as well. Because you've got to remember how hot these things were back when lithium was booming, and everybody in every chat room was just falling over themselves to buy. Make no mistake, there are people who seriously regret those decisions, and they will want to undo those mistakes when we get to 80 cents. But I'm pretty happy with that one at this point in time. As I said, let's quickly go through them. Allkem, obviously the big merger coming up with Livent or Livent, however you wish to pronounce it. That's up to you. The ticket code for that one on the New York Stock Exchange is LTHM, Lithium. Very apt name. I think it looks half decent, much like the Allkem chart was looking before this announcement. But Allkem's probably the pick of the two. You'll end up with CHESS depository receipts once the deal goes through, and it looks like the deal's going to go through. Allkem, if you remember, it's one that we said somewhere around here, or I said if it closes above 1260, add some risk to it. It closed above 1260, you could have added some risk and you would have done really well. So pure luck. I can't know the future. I didn't know the takeover was going to happen. I can't take any credit for telling you to buy it in the past, because I can't take credit for what the market does. The market's going to do what the market's going to do. It is nothing more than a coincidence, ladies and gentlemen. It is an absolute coincidence that I said plus 1/3 and then the price went up. It's just, for anybody to take any credit for anything that occurred in the market is just absurd. Okay, that implies you knew something was going to happen, and I don't know what's going to happen next. I can assure you of that. Hold, buy, hold, sell. I think you can hold it. I don't think these candles are so sinister that we need to be offloading any. I know there's a big profit there, but I think it's fine. If you were to close beneath, say, this low here, then I think that would change. So, close beneath 1440, then you look to take some profits. We do have a big point of supply, not that far up from here. The next one then to look at, and I'm just going to go alphabetically here, maybe Argosy. Used to be one we used to follow very closely. It fell off the radar, as you can see, for all those black candles. Or for the reason of all those black candles. Is this so good? I think you need to get back into it. I don't think it's awful anymore, but I don't think it's going to be the best one out there. Look, I think if we can close above this high here, which is 55 or better, it actually might start to look interesting again. And if you get that flourish, so if you can close above 55 with a nice big white candle, right, then I think you can go specky 1/3. So it's very conditional here. So close greater than 55 with big white candle, right? Then I think you can plus 1/3. I'll put that on the screen so we can refer to it later on. Again, just alphabetically, Core Lithium would be the next place to go. It wasn't my favorite. I think it's done really well, to be fair, even though it wasn't my favorite. And you can see here this little POS I've labeled how it's turned into a pod. So you can see there that POS has become a pod. I think the candles are very good. I don't think I'm going to buy it because I'm concerned about the supply in this zone here. I just think from a reward to risk perspective that it's done for the interim. Not to say it can't go higher, but I just think that the supply there is obvious, and I don't want to mess with it. So whilst, yeah, you could have added some risk based upon everything I've taught you in the past, probably a little bit too late on that. And we kind of didn't go on that one on the basis of adding this one here, which I've had some positive comments about. I said if it closes beneath 1470 to take some profit. It did actually close beneath 1470 on that day. Do I think you need to add back in? I think it's okay. I think these candles are pretty good actually. So yeah, if you did take some profits on that, you're getting in maybe a little bit higher here, but that shouldn't bother you. It's just is the probability skewed more towards it going up or down? I think it's pretty close. I think it's what this is good. This old point of supply is acting as a point of demand. If you have it, I think you can hold it. I'm just trying to get my brain around whether I would buy it, and I don't think it's awful. So I think that's good. I think that's good. I think that point of demand is an obvious place where you could set a stop loss beneath. So that low there, 1446, 1447, 1445. So like a 1435-ish sort of stop loss. And then your target is up here to 1646. So on that basis, look, I don't mind it. Let me say, look, if it closes at the high of the trading session today, and it's currently 1487. So let's say, sort of 14. I really want this to nail the high today. All right. So it's not so much I guess, what that price is, just as long as it closes on the high of the session today, then I think you could add plus 1/3. Okay, so plus 1/3 if closes on high of the session. Okay. And then we won't do them all, obviously. Maybe we'll just do Mineral Resources. This one is lagging behind. I think it's obviously an iron ore company, not as much a lithium company, at least at this stage. And that doesn't excite me at all. If anything, I feel it could probably even go further down. So I'm not a buyer there. I think if you've got it, you can hold it, but you would have to really look at a close beneath that level as a place to exit. And I would say completely. I'd say, even if there's any uncertainty as to what to do, I would say you are all out of MIN below here. Okay, I think that's definitive. Okay, and I'm just trying to remember them. I have to get to Pilbara at some stage, so we might as well go there now. Again, one I've been quite positive on in the past. I've run it as a feature chart, for example, in my Twitter, down and around here at $4. We are in a supply zone. I think there is some supply there, clearly. Look at those upper shadows. But I think this candle here is quite important, and I think today's candle is important as well. So it's a bit like the other one there, IGO. Okay, so I think you can hold this one. I don't think there was anything so sinister as that big black candle we saw on IGO to have suggested up to this point you need to sell it. So I'm going to go 100% hold on this one, and I'll give you a level just in case I don't see you next time. But I reckon if we close beneath that low there, and that low is 463. So let's say sort of, close less than 459. I think you're going to go minus 1/3 on that one. But otherwise, happy holder. Could you add some more? Maybe on a close above those shadows, then you got $5. We're in the supply zone. No, look, I just think stick with what you got here on Pilbara. Okay, IGO had better reward to risk up the top there. And there should be other ones I should talk about here. I mean, Liontown's getting taken over. I don't think we need to talk about that one anymore. I know Sayona is very popular. I don't understand why it's so popular because look at that. It's just not exciting. I think if you've got it, you can hold it. If you've got it, you're going to hold it no matter what I said anyway, because you're a true believer. Should I buy some? Not for me. Look, I might regret it. Look, it's starting to turn up. I might regret it, but then I'm probably not going to regret it. Sayona. Well, I know I'm not going to regret that one. GL1, this big candle here was quite interesting. It's actually traded reasonably well back inside that candle range. So I'm not averse if this was to close above this high here, and I'll give you a number, to adding some risk on this one. I love the big white candle. So that high there, 128. So I could add some risk on this one. So close greater than 128. I could go plus 1/3 on that one. And GL1 I know is very popular. A reasonable trend here. Last time we looked at it, I think I said everything's starting to look better, but I was concerned about the supply coming in at this zone. It's still there, but I think we're dealing with it. So I'm actually quite positive on this one. I hold, unquestionably. Buy, let me see some white candles come in. Let me see another white candle like this one. So another white candle like that. So you get that over there. Then I think you can go plus 1/3, but wait for it to occur. Okay. And I can't think of any others. So there's my lithium sector review for you. Okay, let us head back to your questions here, which is Ramelius Resources, which I think looks very, very good actually, and I'm glad it does. So we have added some risk to this in the past. I think you can hold on to that risk. In fact, let us say, and I do need to update because I'll have a new update based upon the 1 o'clock candle, which comes through at 20 past 1 Sydney time. And we probably will see this last candle just change its shape a little as the data gets added to the database. I'm waiting for it to have it. It hasn't. Looks like it's still the same. That's fine. I like this. If we close at the high, obviously, but well, it's kind of an at the high thing, isn't it? I mean, I could say if it closes 142 or better, but it trades to 150 and then closes at 143. See, I wouldn't like that. Okay, so let's just kind of modify that language a little and say, close at high plus 1/3. We've got plenty of plus 1/3 today, ladies and gentlemen. I remember last week we couldn't hardly find any, but today there's a bunch of stuff that's looking really good here. So, I like this. I like this. I know there's a bit of compression here. I'm guessing 150 from the past was an issue. There you go. And it is. Probably should have just looked at my big red zone there. That was a giveaway. So I don't mind the compression. underneath a clear point of supply from the past. In fact, I should expect it. So I think we're all good. We're coming back to the green zone with blending those two candles. If we close at today's high, I think looking quite good, and that's where I like to get them. So happy holder / adder conditionally on Ramelius Resources. What I might do, just to prove that this is what I'm here to do, is to look at this as well. Is just have a quick look at RMS over here. And we'll get some broker coverage. We've got 7 brokers, 4% upside in the target to 144. 2 strong buys, 2 buys, 1 hold. And the EPS line here is a bit lumpy, to be fair, and that's gold companies, isn't it? Rising costs have hurt them recently. We're expecting, or at least the brokers are expecting it to return to growth. And because I got my big warning sign flashing there, that's good. I won't tell you the wrong compound annual growth rate. I'll get it right and say that, well, from 8 cents to 16 cents over 3 years says that it's about 36% per annum, isn't it? Compound. So that's obviously very good. The PE is 11, so it's not particularly high for that growth. In fact, you'd say it's very low, but I'm going to guess that Ramelius tends to trade on a low PE anyway because it's a gold company, and maybe a lower PE is probably warranted. Okay, so I think you could go lower. I think you probably could go 10 on this and be more representative of how this has been priced in the past. Now, it's not going to change things. It's still going to say it's very cheap. But that is because that is a very, very good growth number. You might say because it's a mining company. I don't think we need to change anything else here. I think that's all very sensible. You might just ratchet that up a little bit and say, well, you know, it's a commodity company. What's gold going to do? I don't know. And therefore, it's still looking good. I'm not trying to make this look worse. I'm just trying to bring it closer to something which resembles reality. Okay, but it's still looking cheap. There's nothing on that spreadsheet to suggest that we can't buy it on the chart. Okay, that's where we're going with our fundamental analysis. Okay, I don't rely on fundamentals. I rather rely on the charts. But I know some of you out there gives you this warm, fuzzy feeling of contentedness when you know the fundamentals match up. Hugo is asking how Graincorp is doing. I do want to talk about this one because it's very topical right now. It's one I've said in the past that it doesn't look very good. In fact, I might have even said on the call a couple of weeks ago that you could sell it, and that's because I couldn't see the future, and I didn't know it was going to report better than expected earnings. In fact, upgrade those earnings and say we're all going hunky-dory. I like white candles on announcements. You know, you could have even bought it after that as a trade. Right now, I think there's too much here, okay, that it would just cause me to pause. Okay, I think you've got it, you can hold it. Watch how it trades around $8.80, $9. If you get the supply side buddies, what do they look like? Look at this. Look at this. If you get them again, I think you need to get out of this one. If you've got it, hold it. If you don't have it, I'm not a buyer here. I think just too close to that major supply zone. And a lot of work needs to be done before I would upgrade that to a buy for me, because I'm not in it. Let us keep moving here. We're going to stick with a bit of a gold theme here, Emerald Resources. I do watch the call on Auspice, and with all due respect to the people on there, I'm pretty sure that they said take profits on this one. And you tend to see fundamental analysts, again, with all due respect, I'm not trying to disrespect anybody's methodology here, but fundamental analysts will often look at a chart like this and say, oh, look, you've had a good run. I think you should take some profits. Take some off the table. Take some off the table. I look at this and say, please don't take any off the table. It had a little bit of a pause here because there's $2 is on the table. And I bet you beyond all bet you that there are a bunch of people who got in around about $1, right? That all of a sudden it's $2. And of course they want to sell. They just doubled their money. But despite that fact, the demand is rock solid here. The candles are great. The price trends are great. And I wouldn't be selling a single share of these. Okay, it might be famous last words. Hey, maybe those fundamental analysts would have been right by saying, take some off the table. But there's nothing here to suggest that's the right thing to do. In fact, you could, I'm quite happy just to buy more here. I can't see any reason. I reckon Emerald Resources, ladies and gentlemen, is my most tweeted feature chart. Correct me if I'm wrong, because I know many of you follow me on Twitter. If you don't follow me on Twitter, follow me on Twitter, all right? Because I put out, not quite daily, but when I have time, okay, my feature chart list. And I reckon Emerald's been on that feature chart list almost more than any other stock on the ASX, and a happy holder there, no complaints. I'm almost scared now to go over here. I will go over here Because I'm scared to find that the fundamentals are rubbish. Not that it bothers me, right? Now, we've only got one estimate, so we don't really have any fundamentals. There's no point trying to do a valuation on that one. Okay. That was just cherry picking if there's any gold stocks in there, because I'm kind of doing a bit of a gold thing at the moment, and I'm not seeing them in these lists. So it's not really going to be a gold review. I'll keep moving. I won't go there, but I will go to uranium, which has had a bit of a pop. I know the boss, as we've talked about in these sessions, is the most interesting. I think the most prospective, the one I can get to a hold on. I think you can still hold it. There's nothing so sinister in these candles here to tell me that you need to sell it. So I'm going to go hold on boss. Should you buy it? Look, it would only be an exercise in futility and pain if you were to buy it here, or to really buy boss anytime. Okay? Futility, pain, disappointment, which would probably turn to resentment and regret at some stage. But hey, if that's you, if you love pain, buy Boss Energy. That's for you, Glenn. Hanelli asking for Aristocrat, which we couldn't not do this session without talking about Aristocrat, because it's one of my favourite stocks. I keep tweeting about it. I keep putting it on Ausbiz as my favourite stock, and it's going very well for you if you're on it, and I think you can hang on to it. Hanelli, you know what that candle means at the end there. You know what all those white candles mean, Hanelli. There's no reason to sell it. Okay, just hang on there and just let it do its thing. Where could it have a problem? Where could it have a little crisis of confidence, Hanelli? Maybe around there, but let's let it get there and see what it does when it does. Happy holder of that one. King saying he loves my work. Thank you, King. Let's see how long that lasts. 7 group holdings, I think, is fine. Anonymous. No reason to sell. Would I buy it? I'm not averse. But there's just a bunch of black candles in there. I'm going to try and move through quickly here because we're getting low on time. Happy holder. Hold is 90%, buy is 10%, and sell is 0%. Okay, that's where I am on this one. Okay, so happy holder there. Let's keep moving. NHF for Nicola. And, this looks great. I have tweeted this one a couple of times. I think it looks great. Plus 1/3. No issues there, Nicola. You know why. Plus 1/3 on that one. If you don't have it, if you've got it, you're adding some risk to that one. Let's make sure that candle closes towards those highs, though. Okay, because that looks amazing. Yep, amazing. Weekly chart, I reckon it'll look even better. Okay, so very happy with that one. Let us go to Peter. Peter's asking for CSL. I'll get to you in the chats next, I promise. Look, it's once again threatening. We talked about Boss Energy being an exercise in futility. Let me add CSL to that list. Hold, not a buy based upon that last candle. Look, let's just stop talking about it. Let's all agree not to mention CSL in these sessions ever again. Peter, I'm talking to you, until it gets above 315. When it gets above 315, let's agree to cover it every week. Okay, until then, forget about it. Okay, I promise I'd go to some of these in the chat here. I changed the screen. Bloody hell. What did I miss there? NHF and Nicola. Thank you there. Andrew shouting at me, rightly so. I did SVW, didn't I? Where did I lose you? Oh gosh, where did I lose you? Still on EMR. Gosh, EMR. Oops, I don't have any helpers from Think Markets today to shout at me. So went after EMR. I definitely did ALL. Did I do Boss? Oh gosh. Boss, I'm so sorry, everybody. Hate it when this happens. It's such a waste of time. Boss, I said, was an exercise in futility and pain. I think you can hold it. Look at those last candles. They're fine. Okay, we're coming back. We're showing some demand in here with those lower shadows. So hold it, not a buy for obvious reasons. I talked about ALL, and Hanelli asked me about this one. It looks amazing. Look at those wonderful candles. Look at those white candles. This is a sort of chart that makes me happy. Watch for how it performs around 40 to 42. Then I talked about SVW and I said, look, happy holder. I think holder's like 90%, buy's about 10%. There's every possibility buy could grow and grow and grow, and we could add some risk. In fact, I probably actually don't even mind adding some risk on that right now. I think it looks very solid. And then I talked about NHF for Nicola, which I think looks amazing. And for me, happy holder there. And then I scolded Peter for asking me about CSL. And he's not going to ask me about it until it closes above 315 again. Okay, and then we're going to go over here and we're going to do SHV because I did say plus 1/3, didn't I? And it hasn't really turned out very well at all. And it might be a case of the toe getting chopped off here. And it's a bit tricky. So just look at the price action. Again, don't just wait for me on Tuesday. Do this analysis yourself. And if we do get those lower pods in place, so there's your pod there, POS, I should say, and there's your POS there, and there's your pod, just scamper out of it, okay? Just don't be a hero. Just scamper out of it, okay? I think you can just be out of this one, okay? I think you can be out of this one, and if it starts to go back up again, we'll look at it again. It didn't turn out. Great white candles. Hey, don't know the future, okay? All I can say is, and how many times have you seen yourself things continue to go from there? I think maybe it was a bit early. We hadn't seen enough confirmation yet that that long-term trend was changing. Super aggressive. I'm going to go minus 1/3 on that. And I know that will frustrate people. MAN, I'll do another one for you, Marco, because I've probably done you a disservice on Select Harvest. Not yet. If you've got it, I don't know. It's so little, so tiny, so sketchy, and there's so little interest here at this point in time. Let's see the volume come in. Let's see it push back up with high peaks and high troughs and white candles towards 5 cents, and you might have something interesting going on there. But until then, I just can't find a reason based upon the technicals. Now, I can't look at the fundamentals. We don't have time, but it's just not there. Flight Center, which I've been very positive. I've run it as a feature chart many, many times. Happy holder here. That black candle is not ideal, but in itself, I don't think it's enough to warrant selling. Okay, so I'm going to go hold on this one. I think we're coming back to that light green zone. I think that eventually we're going to just make our way back to there, and then I think we can go higher after that occurs. This will create a little bit of a point of supply in here, and then that's the major one there. In terms of reward to risk, maybe we're, I started tweeting about it somewhere down here, didn't I? So maybe you're a bit closer to the end point than the beginning point. On that basis, you maybe you could take a bit off the table, but not today. Today's fine, and you can use maybe today's low. If it closes beneath, say, 2016, a bit more scrutiny might be required, but I think it's fine. I'm going to go hold on that one. That was for John. Let's go to NEU, which is, what do we say here? If it closes beneath 13.59, I said that you would minus 1/3. Has it closed beneath 13.59? I think it might have on this day. Closed 13.37. So you might have taken some profits off the table. You're probably cursing my name, so it popped straight back off that green zone. I just felt that it was just taking too long to occur. Pesky supply in the system, I said. It is why, plus here, exit there. I think it's fine. Happy holder. Oh, are we going to be drawn back into another plus 1/3 on this one? Not on that shadow. Today's candles is okay. Okay, not great. Back to hold. If you got out a third on that one, look, apologies, but you probably had a bit more than that. Okay, so you still got some skin in the game. I think my point last time would have been skin in the game. Retain some skin in the game. Okay, I got all through those. We've done the people screaming at me, fair enough, and TIA. Getting pretty close here on time. This one is from Simon. It says TIA. Look, he's also got BKW. TIA, there's no heartbeat there, Simon. I'm not sure if he actually meant that one, but Brickworks, I think, still looks very, very good. Happy holder, not a buyer. I just think that these lower points of demand would keep you out. Lower points of supply, I should say, would keep you out just for now, plus the black candles in there. And I would say that if you are already on it, just watch very carefully, because this should be a very strong demand candle in here. So if we were to close beneath that low, 24.22. So I'm going to say close less than 24.22, and you might round it down a little bit below 24. That's up to you, but I would say minus 1/3 if that occurs. But until then, happy holder. No reason to panic out of that one just yet. Hugo's also asked about CSL. Rushang's also asked about Flight Centre. Robert's shouted at me. That's fine. AVH. Oh, look at that. But I don't think you could have seen this one coming. I know this is a bloody awful candle, let's face it, and I know that this obviously lower POS is not great, and then you broke beneath, but the gap you wouldn't have time. You would have had to have gone 1/3 at the close of that candle, otherwise you would have got hit. But this is a problem now. So this candle here, that shadow there, and I think we're just waiting to get a better price. So if you can get a better price, based upon this last candle, white, full body, hang on. But all you're doing now is just waiting to see where this rally terminates, okay? And if you see the supply side buddies sort of somewhere around here, around $4, okay, that's your chance to get out, okay? This is an exit now, okay? This is a manager exit, and hey, I don't know the future. It might go back straight back up to $5. I don't know, but the way I would play this is I would be looking in here very carefully for the supply buddies. In here equals minus 1/3, okay? And let me move that up. TIA, he did want to look at that. It's not much going on there, mate. If we look at the volume, 5,000 shares on that day, 7,000 on that day. I mean, this is barely trading 10 shares. This is not for me. This is not for me. 3,000 shares. I'm struggling to understand how this is even still listed on the market. I don't mean that in a nasty way. There's just no interest here. And you need volume, you need that interest for this thing to go up. Otherwise, how can it? If you're trading 60 shares, it's traded 60 shares today. So no, this is an avoid for me, just on the basis that there's just no interest from the rest of the market there. CXL and SMP, okay, don't put any more in. I've got 3 more and then we're ending it today. So ENR, in fact, before I do that, because I know you'll run away at the end. All right. You need to register for this. Okay. So send Nick an email, N Coulson, just type it out. Don't make any spelling mistakes at thinkmarkets.com. We are building the landing page, so you'll be able to register in a little while. But I do have a live event. How about that? Going back to live events, 22nd of July in Melbourne, 29th of July in Sydney. Myself and my good friends, Kel and Jason, will be there to talk to you about stuff we like to talk about. So I'll be talking about how to invest like a hedge fund manager. Kel's going to talk about his favorite topics, which is trading Forex and commodities. He literally wrote the book, 2 of them, on that, among many other books you can find on your various book selling sites. Obviously Kel is currently managing funds at Amplus Global, and Jason McIntosh, who runs Motion Trader, systematic approach to high risk, high reward, low risk trading. But I think Jason, he sent me an email today, says he wants to change the name of it, but I'll leave that up to him. 29th of July in Sydney. Just those 2 locations at this stage, depending on the response here, whether people want to come out and see us in person. We may expand them to the other major capital cities, but we're looking for a registration of interest. So just send Nick an email, say, look, make no mistake, I will be there on those days. If we don't get enough people wanting to come out live, we'll run a webinar. But webinars are boring, aren't they? I'd much rather meet you in person. Okay, so we're going to finish on the last 3 today, which is ENR. Wow, amazing. Encounter Resources. There's your volume for Simon, who asked me about TIA. So what have we gone there? We've gone, see, I don't even know how, that's whatever that is. When it does the little E plus the 06, that means it's got some volume on it. That's what you want to see. That one there, even more E's and plus 06 on it. So that's interest. If you got it somehow, you're lucky enough to get it. Happy holder. And I know a lot of people would say, oh no, take some money off the table there. No, not with that white candle. I know there's some supply in there, but it's gone from 0 to hero. But I think it's fine. Again, watch for the supply buddies. Whoever asked me about this one, Hanelli. I will love that one. She said, I bet you'll love that one. I do love it. Would I buy it here? For me, no, I just think it's too far away from my light green zone. But if you're lucky enough to be in it, you'd be holding on to it. But I'm not even sure if we had much of an opportunity before that, to be honest, based upon my model. It's one of those ones that just go berserk. Smart Pay, happy holder here. I know there's some supply coming in there, but I think that supply has been more than balanced out by the demand that's in the system here. Okay, so these candles are all very positive and they're happening around the green zone. So I think this one's more likely to be setting up for another buy rather than having to get out at this stage. But what that demand zone gives you is, I think, just the most wonderful, the most obvious point where if we close beneath there, then you clearly have some problems. So that low there is 139. We might give it a little leeway, of course, every time I say this. But so let's say close sort of less than, say, a 137 or something. Then you'd be looking to manage your exits on that one. Okay, I'm going to change the color of that because you can't see it when it goes light green. And the last one I promised to do today was for Helen, who wanted to do CXL, which, I can't remember what we said last time. Oh, look at this. So last time it would have been one of those ones where I said, hey, I don't like it, but I don't know what's going to happen next. It could be the best stock ever. It actually has gone up a bit, but the leopard has retained a few of its spots, hasn't it? Unfortunately, Helen, and we're seeing a bit of a problem here. Continued problem, I think, here. Look, I can go hold, which is, I don't know if that's what I said last time, but I think this time we can go hold, but it's not looking great, is it? Clearly there's some demand in and around that 440 to 420 zone, and as long as you stay above there, if you like pain, you can continue to hold it. I'd be really concerned about it if it closed beneath that low there. So anything sort of below $4, and surely you have to give up the ghost on this one. You have to say, look, at $4, if it breaks through that, this thing is probably going to 50 cents or something, like all of these other big picture, battery, future green plays have done in the past. Can I buy it here? No, buy is completely off the table, but that's just me. I can't see a reason to do it. Okay. That is the end of everybody's requests. So I'm quite happy that I managed to get them all done. You can always come back next Tuesday to do ASX, but you can join me on Thursday to do the macro stuff. So indices, commodities, forex, and crypto. See how those things impact your portfolio. Then on USA, we're going to look at stuff like Livent, and Meta's done very well for us, and Facebook, Microsoft has done very well for us as well. So, those big US companies, which are, you've seen the NASDAQ, you've seen my tweets on that, you've seen my commentary, and the NASDAQ is starting to move. So get out there and register for that USA edition. That's how you do it. If you're not a client of Think Markets, well, of course you should be. And of course I have to say that, but I do think they are the best in the business. We've got everything you need to trade, all from the one client portal, whether that be your good old-fashioned shares or it's your CFDs, trading indices, commodities, futures, crypto, and shares. And my presentation is going to be largely around how you can use commission-free and use these CFDs to trade like a hedge fund manager, to make the most effective use of your limited capital. We are an award-winning broker. We've got offices all over the world. We're regulated all over the world. Your money's kept safe in a segregated client account. If anything ever happened to Think Markets, you would get every dollar and everyone in shares back, because we're CHESS sponsored. All of those brokers out there that might be offering a cheaper rate, you can't say that. You can't say that. Your shares, to get that cheaper rate, to provide you that cheaper rate, they aggregate all of your shares together in this big holding pool of shares. Okay, if Think Markets evaporated off the face of the planet tomorrow, you get every dollar that's yours. You get every share that's yours, and that's why you want to come with us. Plus the best apps and the best account managers and best support. Me, hopefully, I come into it. And if you want to hear more of what I have to say, hit the subscribe button and hit the thumbs up button to let me know you like what I'm doing, so I continue to do more of it. Apart from that, it's been a pleasure chatting with you today. All the best if you're trading and investing. Until we catch up again. Bye-bye for now. Hey, before you go, don't forget that everything we've talked about today is general advice. It has not taken into account your personal financial circumstances or particular needs. So before acting upon any of this general advice, you should consider it carefully or seek the help of a financial professional. You can learn more about Think Markets and all of our products by heading to our website and downloading our PDS.